Hello everybody, I want to make a video about the importance of the log scale, especially to chart crypto. So, it's gonna be a little bit boring, but bear with me, I think you're gonna learn something. This is the Elliott Wave Principles, a book from Preacher, page 71. It speaks about the importance of log scale. The correct method for tracking the stock market is to use semi-log chart paper. Since the market history is sensibly related only on a percentage basis, the investor is concerned with percentage gain or loss, not the number of points traveled in a market average. What does that mean? Applied to Bitcoin. It means that it's stupid to compare a $1,000 move at 3K with a $1,000 move at 20K, or with a $1,000 move at 100 bucks. Okay, if you remove the log scale, you see that all these boxes have the same height, more or less, but in terms of percentage, like, it's not the same world at all. A 1K move at 100 bucks, it's a 600% increase in price. Whereas at 20K it's a 6% increase. That's a 1 to 100 factor difference. So that's one thing. Let's keep reading. For ease of charting, however, we suggest using semi-log scale only for long-term plots, where the difference. Well, it's a book written in 1977, so back then they could not use as easily the log scale by just pushing a button as nowadays. Arithmetic scale is acceptable for hourly wave, since a 40 points rally at 800 is not different as at 900. First channeling technique work well on arithmetic scale with short-term move. Next page, 74. The larger the degree, the more necessary a log scale usually becomes. Waves of the same degree will form the correct Elliott trend channel only when plotted selectively on the appropriate scale, meaning that for channeling, sometimes it's gonna work on arithmetic scale and sometimes on the log scale. You have to try both and to see which one is gonna work. Page 76, question of whether to expect a parallel channel on arithmetic or semi-log scale is still unresolved. If the price does not fall neatly between two parallel lines, switch to the other scale in order to observe the channel correctly. To stay on top of all development, you should always use both. Well, that's the same thing as what I just said. Page 165. Here we have a graph, and what does Preacher do is comparing the length of this wave 1 and this wave 5 by comparing the length in terms of percentage, which is what gives you a log scale, by the way. It allows you to visualize the price in terms of percentage change instead of arithmetic change. And if he sees that there's a 618 ratio proportion between both these waves, as expected between wave 1 and 5 of when you have a third wave extension. What else did I want to show you? This graph from Preacher still, from 98, and here is doing the same thing. Is relating wave 5 to the net distance travel from wave 1 through wave 3 in terms of percentage. So 1,430 divided by 2,314 gives a 618 ratio. And applied on TradingView, this means that, well, unfortunately TradingView is broken, because on TradingView the Fib tool is not adapted to the log scale. So the Fib tool is totally useless on log scale on TradingView, meaning that the Fib tool is totally useless to chart crypto on TradingView, because in crypto you have such big moves that you have to use the log scale, and you don't have access to a proper fib tool to chart crypto on TradingView. So I'm a paying subscriber on TradingView, by the way, and now I have to install another trading software. And what do we have on Bitcoin? Well, you have this option on this software. It's Trade Navigator, the name of this charting software. And you have a button where you can use the semilog for drawing tool. Okay, so without it, it's the same as TradingView, useless. You just push a button, and what do you have? See the bottom, we bottom to the tick at the 382 of the preceding bull market. Not only that, but you see this fib extension? I projected this length to here, and we have a 618 here, ratio between this wave and this wave. When I remove this, the 618, when I remove this, the 618 disappears off the screen because it's in negative territory, like in TradingView, for example. Let's see. Why is the 618 on TradingView? Here at minus 2k, very useful. Thank you, TradingView. Very useful. So, what is this? What is this move where you have two waves which are related by 0.618? Right? Because I hear a lot of people saying that, well, we don't know what this move is because you cannot really relate this wave to this wave because the difference is too important. It's not the same scale. Well, when you do this, you're saying that it makes sense to compare a 1k move here at 20k to a 1k move at 3k. And it doesn't make any sense. So you have to use the log scale to chart this. So in the log scale, you have this fib proportion. And how else can you verify that maybe it is what we think it is, a zigzag? Well, channel it. I'm not going to do it on the other software because I just installed it and I did not figure out yet how to use the channel. But well, when you channel it, what do you see? It's channeling perfectly like a zigzag. Not only that, you can also measure in time the relationship between what is, I think it's pretty obvious, wave A and wave C of a zigzag. What do you have? 1-to-1 relationship in time. In a zigzag, you also have another thing, which is that wave C should have a slope inferior to wave A. Well, that's what we have here. So this is a textbook zigzag. It would have been much easier to figure it out with a proper charting software like this. I hope TradingView is gonna fix their fib tool soon. And yeah, I mean, that's pretty much all I wanted to say. Maybe just for finishing, drawing a little pitchfork. Well, what happens when you miss the medium line? Sharp reversal. Where's your buy signal? Here at the Agopian line. When we break the Agopian line, what happens? 1k move in 30 minutes. Okay, that's it for today. Bye, see you.